Seconds. Wait till I get, there we go. That is on. Our plan for today is that Henry's going to start the lead or take the lead. He's got just a great breadth of knowledge in regards to the markets. He and I get together and talk about market things all the time. I learn a lot from him. So he's going to take the first half. I'll take the second half, and then we'll kind of get together to discuss the what's next. So Henry, you want to take it away?
You bet. Thanks, Brian, and welcome everybody. My name is Henry Howard. I'm sort of the third in command here at Market Structure Edge. So I sent the desk note this morning. I mentioned I've been sort of user number one along with Tim and along with Brian. And so I wanted to walk everyone through my personal process. So I use Edge in my personal trading every day. I have about a 20-minute process where I go through the data. And so I'm going to walk you through my process. If you have questions at the end of it, feel free to ask those questions. Though what I wanted to start off with before I jump into the process is I wanted to just briefly share about the difference between headlines and data. The last few days, we've had a lot of significant data markers. And the point I want to make in those is that I'm always taking that context, and I'm measuring that context against the background of broad market sentiment and our daily volatility. So whatever the move might be, I'm measuring that against what is the broad market sentiment, what is the individual stock sentiment, and then what does the short volume show about that stock, and whether or not that drawdown is going to be a continued move, or if we're actually going to have an opportunity to buy that volatility on a little bit of a dip. So I'm going to go ahead and share here. We're going to hop on. We're going to show this whole window. Okay. So you're going to see yourself here. So for those of you who are new or might be joining us from IBKR, this is our feature product, Market Structure Edge. You have access to custom portfolios in here. We can actually create dynamic and static portfolios. A lot of these are our default portfolios here on this top and second line. And then we'll get into the daily trading ideas, which is a feature that we've added. I'm personally loving it. It's streamlining a lot of my decisions. But I'm going to go ahead and start with, a sort of a top-down approach, looking at broad market sentiment. So when I come in each morning, I'll look at broad market sentiment. We have about a 3-month view here. And, I mentioned as I change this to 6-month, I mentioned in my note this morning that I'm realizing we've really been relatively level in our broad market sentiment. And as we've ticked higher over the last few months, really it's been a function of ticking higher, covering our shorts, going a little bit higher, covering our shorts, testing new levels, covering our shorts. And Tim mentioned it in his note recently that really that ended last quarter. I made a note of it this morning. Most of my good ideas come from Tim and Brian. So what I'm looking at here is I'm actually going to go all the way, and I'm going to look at broad sentiment, and we were at 5.8 earlier this week. I'm not seeing this flatten out yet, but we're still above our number of 5, and we don't have super high short volumes relatively. We're more of in a long short position. As we said, a lot of the time we'd say we're in a long short position. So this right here tells me that the market's probably not about to fall apart, and that there may be some good opportunities to buy some dips. So that's the first thing I'm putting into my hopper to sort of analyze. The second thing is our big tech portfolio. So there's just a lot of information in this big tech. There's a lot of market cap in this big tech. And so one thing that I see is that sentiment within this, I'll show you very quickly. the handful of components are all familiar names, obviously. The two things I'm looking at are we starting to find a bottom here? And actually, what we might see is as this short volume, as we turn and go, as the prices go up, there actually may be more covering. So we may see short volumes rise while prices rise because we see that covering. So again, I'm kind of measuring this big tech against broad market. And then I'm going down here, and one of the things that I really like to watch, Brian mentioned it yesterday, is what do you see in behaviors? We see a lot of fast trading. So that's machines who are setting prices. They're you know, they don't want to own stocks for longer than a day. They're simply finding prices. They're finding liquidity. And when we see these take place, we can have some expectation of the moves that we've seen pre-market in the last few days. But again, you know, relatively, if you follow these, I'm going to look at supply right here on all these big names. A lot of market cap is only at 33, 34, 37. And obviously the price of those stocks is reflected in those short volumes. And we see that, you know, those stocks are actually sort of at a discount relative to where they were a month or so ago. So that's sort of step two. I went from broad market to big tech. I'm going to pull back here, and I'm going to go ahead and look at our daily trading ideas. Before I do that, what I also look at is the context. So I use a free service called Forex Factory. It shows me when you know, significant data releases are happening. And so you know, yesterday we're aware of CPI. Today I mentioned both the PPI, the unemployment, and what actually may be more significant is pre-market tomorrow. We have a lot of big banks. Later on, if you want to, we can look at JP Morgan leading into earnings tomorrow morning. But sometimes big bets that we can't see take place during earnings. And so again, those tend to be landmines in my trading rhythm more than they are opportunities to make earnings. I'm looking for the wash, rinse, repeat, 1%, 2%. So with that, I mentioned we mentioned the broad market sentiment, the context, and now I'm going to go ahead and get into, I'm going to mute a couple people, the daily trading ideas. So in addition to, if you've been with Edge a while, you recognize that there's a certain number of components in each, both momentum and our low volatility portfolios. So recognizing 5 components in our low volatility is not a lot. When I see you know, when I see names like Spot, it doesn't give me a lot of confidence in our momentum. Sometimes I'm looking for certain names that I feel more confident in this more momentum portfolio. So again, there's only 6 components in here. If I look at low volatility, Brian mentioned yesterday there were 29 components in low volatility. Now there's only 20. So none of this data is giving me a ton of confidence to get long. The one thing that is giving me this level of confidence, and why I think we saw a bounce this morning, was our big tech portfolio. Those really low volumes or low short volumes in big tech, those tend to be our turning points. And big tech has actually been sort of a safe haven, contrary to what maybe history has told us about the tech overall being more volatile. Big tech has actually been that place that's been a safe haven. So that gave me those low volumes in big tech, and this flattening of demand in big tech gives me a little bit more confidence that maybe we'll have a little rebound, and some of these data releases don't need to be as concerning as people have made them out to be. So so that's all, you know, loaded into the hopper. Knowing that there's a little more risk, I'm going to opt for our low volatility portfolio. I like to have this portfolio view. Obviously, you can do sort of a more of a visual view by clicking on probabilities. If I wait a second, it should pull it up. And if it doesn't, I'll hop back to the table. It's just may just be because I'm streaming video. So what I'm looking at here, I'm sorting these by probability. Obviously, this is from down to up, so we have Coke at the top. Here's my names that I mentioned this morning. I looked back. One of them was Qualcomm. So again, we're looking at tech. I'm not so averse to tech. I see Tim's note from 3 days ago. I know he says Qualcomm's not a bad option. I think Qualcomm just on the day is up about 2.25%. From this morning. I think when we mentioned it, it was closer to like 169 something. So just this morning. So I'm curious if anybody hopped in on that also. The other thing that I'm looking at is these sectors. So the three that I mentioned this morning and that held up really well amidst these data releases and in the backdrop of a little more volatility is these healthcare names. So I mentioned those three. What I'm looking for, if I want to be really aggressive, I may just put money into one of these names, and if it goes up, I have a gain off that. If it's like Qualcomm, I'm actually able to, don't nobody beat me with a ruler, but I'm actually like a name like Qualcomm. I almost said, hey, if you're already in that name, that's an opportunity to add to that at a better price. So these probabilities are really, really strong. Obviously, they're just probabilities. We always put the disclaimer. But the more you use Edge, the more comfortable you get with this data. That's as much as I do. And then what I tend to do is I'll look at our volatility. And if I see something is intraday down 2%, down 1.5% even, I'll really start to look at those. If you have other stuff you're doing throughout the day, you can set price targets on this stuff and little alerts, or you can actually just target a price and get into something at that price. Sometimes obviously you'll miss out if you're not watching it a little bit. So anyways, that's my process. It's really top down. It's starting with our broad market sentiment. I'm checking out the big tech and seeing what, a large swath of money, all that money gets followed. So it's sort of compounded by ETFs. And then I'm saying, where are the landmines today? What do I need to be aware of? And then finally, I'm getting into counting what components are in here, seeing what the names are and how confident I am in those. And then I can go ahead, depending on those first couple things, where my risk appetite is, I can look at these different names and either set price targets or able to just maybe hop into something and then know that if it moves against me, I can actually get a better price on the thing. So that's as much as I have to share. Appreciate everybody. Happy to answer any questions. Otherwise, I'm just going to go ahead and pass it over to Brian.
So I had
I have a question for you regarding getting in on these. So like yesterday, when everything opened lower than what your low entry price was, how do you determine when to go in on those? Do you just go right in if it's lower?
That's a good question. I mentioned this morning, I'm a discretionary trader. I told Brian yesterday, I said, that's a big bar. I texted him as soon as the CPI came out. I said, that's a pretty big bar. I tend to stay back until some of that volatility plays out, and I see it. I tend to trade on a 15-minute, and so I'll let some of that sort of movement settle out. I try to, I'm not an event trader. I've been burned too many times, but I will enter when I see that that movement settle down a little bit, when I see that price action settle down. I tend to be there for that. I tend to set aside time for those events, just so I can watch the price action a little closer. And again, some people watch price action, I think, too much. All of this price action is happening against the backdrop of our data. So yeah, that's a good question. When I see those big bars though, Steve, I get a little gun shy, to be honest. But like this morning, I was not as gun shy on Qualcomm, just because of, it's a relatively stable name, so I know that the law, if I have to end up, swallowing it, that it's going to be a lower cost to me to take that hit.
I shared with you last week the great results that I was getting using this. And one thing that after this week, each week I keep learning something new about it. And I think that the bottom line is that if you're watching SPY and SPY is down over 200 points, you walk away for the day. You don't enter anything, you just go away. And you're going to have incredible results doing this if you follow that rule.
Yeah, that's big bars. And they tend to be expected though on data. Like it's rare that they take place out of the blue. And that's why I mentioned the bond auction today. Because we've had I shouldn't say odd, but we've had some volatility around those larger auctions when we don't see demand come through. So yeah, Steve, that's I learned what you said, Steve, the hard way a couple times. So thanks for reiterating.
You bet.
Barry, did you have a question? I think you were trying to ask something
Yeah.
earlier.
Yeah, a question I had, well, suggestion and a question. So the question is the probability a rolling 90-day window, so that say something that comes up with 100% probability today, but it doesn't play out over the next 5 days or so, will that be reflected in a new number on the probability, drop it to 98% or whatever it would drop it to?
That's correct, Barry. Yep.
Okay, and then the other question or suggestion I had is on the trade ideas, can you make the default sort so that probability is high to low? Just so when you come in, you don't have to click the probability header twice to get it to sort to high to low. If you just made that default, that would just be a nicety, I guess, to have.
Sure.
So
Yeah,
just a
we will.
suggestion.
We will definitely ask Tim about that. Yeah, so it's a good suggestion.
Okay, awesome. Thanks.
Yeah,
Which I think it's currently sorted by volatility, right? But
Yeah, and if you could make it, because nobody's going to go with the volatility. The old days when we were using this without the probabilities included, volatility was something that we would include, or maybe short volume or something like that. But now with what we're using it for now, it just seems to go right to the heart of the whole thing and go with the probability sort. So.
No, that's a good idea, Barry.
Okay, cool.
Let me go ahead and share my screen. We'll get to a couple of these topics that we've had questions about. All right, similar to Henry, this is my particular dashboard. You will have for IBKR users. And let me show you something. If you're joining the call for the first time, and right now as an IBKR user, you would just get the daily trading ideas. I would encourage you to join for a free trial. It's really easy. If you just go to how it works, well, you probably don't have access to that. Sorry, let me show you where this is. It's just marketstructureedge.com under product tour. And then it's just down at the bottom. And if you just Google free trial market structure edge, you will find it. But what this does is it gives you the capability to have access to the dashboard. There's no commitment, there's no credit card, there's no nothing. It just gives you 30 days to try this out and see if it works for you. What the dashboard does is it just opens up a whole new set of tools. You have some incredible tools with the daily trading ideas. This just really enhances those tools. Along with the dashboard will come preset portfolios like the momentum portfolio, the low volatility portfolio, big tech, like Henry mentioned earlier. You'll also have sector views, all 11 sectors, such as communication services, consumer discretionary, et cetera. Let's start off. I have a number of topics today. I don't know if I will get to them all, and that's okay if I don't. We'll start off with the daily trading ideas. A couple of people have asked about, hey, we had some things coming in with 100% probability. They didn't work. Can you tell me, what's going on there? What's happening with those ideas? So if when it comes up, you get momentum, you get low volatility. To your point, Barry, right now, if you would pull this up, this is how it would go, and that's a good idea. We'll mention that to Tim. As you can see right now, it's going from high to low on volatility. I do the same thing you do. I actually like to do it low to high, but I'll pick off the ones, for me personally, I'll pick off the ones that are close to about 90%. I included these for today on my watch list. It's just my preference. If you're doing names like Para, that's pretty much a coin flip. There's not as much chance of that working for you. There was a question earlier, where does the data come from? What is it measuring? What does 100% actually mean? And it goes through it here in the explanation itself, but we're looking at conditions over the last 90 days. So for instance, VST, when it had similar supply demand conditions over the last 90 days, and if you would have entered into it during one of these ranges, it gave you that type of gain, in this case with momentum, a 2% gain 100% of the time. Now, you also have to be aware of the fact that nothing's perfect. We mentioned that here. Past performance is no guarantee. And let's circle back for a moment and examine why past performance is no guarantee. And for IBKR users, let's show you how you can get to broad market sentiment. If you click on a name, then once you're on that name, you can click on broad market right here. So that's how you can get to the data that Henry was mentioning earlier. Now, if you look at conditions during the last 90 days, and you can adjust this however you would like, let's take a 6-month look. What have we been doing during the last 90 days? Rally mode, right? This is basically that time frame. The broad market has been in a rally mode. If we take it back to the latter part of October, this is essentially a 1% move. It's an extreme outlier in the market. So that's part of what we have to kind of factor into our thinking, that, right now it says 100% probability, but it's a 100% probability in an extreme momentum market, if that makes sense. When we look at overall conditions, we like to break it into what we call BCD. So the B stands for broad market. What's happening in the market right now? And whoever's writing the market desk note on a daily basis will try to cover this. If we were looking at the broad market component right now, and I mentioned this in yesterday's note, that right now it's fading a little bit, right? We're still above neutral. Being above neutral generally supports price increases, but we are moving lower. So there's a little bit of risk in the market itself. One thing that I like to do in my trades whenever possible is I like to try not to trade against the market. So in other words, my best chances for gains is when broad market sentiment is stable or rising and when short volumes are low. I mean, here's an example right through here. We have low short volumes. We have very stable broad market sentiment. If I'm going long in that market environment, I'm generally not going to be trading against the market. I have better chances for posting gains. So that's the B component, is what's happening from a broad market perspective. The C component, and Henry mentioned this earlier. Thanks for that example, Henry. He had mentioned Forex Factory. We'll also try to cover the context every day in the market desk notes. It's very important. You don't want to be walking into landmines. Yesterday with the CPI data, as that came out, the whole market tumbled over. And to your question, Steve, how do I handle days like that? I tend to step back. I don't know if the declines will go further. If anything, if I'm looking for, and let's just take an example here. Let's say it's, is that Nuterra? I forget the name of that stock. But if I'm looking at NTRA and I'm looking at 100% probability, let me see what their intraday volatility is, 4.2%. If I get extreme weakness on a trading day, if it's a normal trading day, I might enter into this, try to enter into it 2.5% lower on the day. But if the market's under a lot of pressure, I'm going to let the market come to me, and I'm going to try to get that name with all of its intraday volatility. So if the market is really weak, I will generally wait until the end of the day and then do my buying at that time. If the market is rather stable the first 30 minutes of the day and I see, let's go low volatility for a second, just as an example. So I see that I think we had one of our big tech names, look, Coca-Cola, 1.2% volatility in Coke. And let's say that that's down by 80 basis points. What I'll do is I'll go and look for news in the name. I'll look, especially right now, we're coming up on earnings season. I'll look for potential earnings related activity. If they're coming up on earnings in a couple of days, I might stay away from that because sometimes you get that pre-earnings positioning. You feel free to trade it if you want to, but just know that hedge funds make a ton of money off of earnings related bets, and you don't know which way that they're going. Me personally, I just stay away from things when we're coming up on earnings, or I give it a little bit of space after earnings as well. So just be aware of that. But I'll look for news. If I don't see any news on Coke and it's down 80 basis points, 30 minutes into the day, I'll buy that name. Sometimes if it's down a lot and I don't know why it's down, maybe I'll buy half a position. I did this a couple of days ago. There were some names that were lower. I'm like, Matt, I don't know why they're so weak today. I don't want to get totally run over. I'll buy half a position, save some ammo for later. And then I added to all those names at the end of the day. And I ended up making, my 1 to 2% by the next day. So that's kind of my approach. The last part of it is you are looking for divergence. And let me share an example here in NVIDIA recently. Obviously, NVIDIA's been on fire, and it had a 10% retracement. So what you're generally looking for when you're going long is you're looking for what we call divergence. And let me take this back a little bit further. All right, so you're looking for pockets where sentiment is rising, and here's a better example. You're looking for really strong sentiment, and you're looking for low short volumes. That's what we call divergence. If you can see, this is the 10% decline before today's trading in NVIDIA, and you can see what's happening with sentiment falling off the map. So that's, not a name that you would be buying. If anything, that's more of a convergence instead of divergence. So that's just an example. So we're checking out broad market conditions, we're checking out context, and we're ideally looking for divergence, whether that's across the market or whether that's in individual names. There was a question about Levi Strauss earlier. Let's go ahead and take a peek at that one. I don't know if there was any news in the name today or not. It had started coming under a little bit of pressure today. And I didn't check this one before the call, so I'm just seeing it's right now it's down about 1%.
Right. It had earnings 5 or 6 days ago, and I think that was the pop. And now it's the post earnings retrace that we're seeing a bit.
Yeah, that's a great point. And that's a good example. I had mentioned earnings. Thanks, John. You can see that you get the pop with earnings. And this is a good lesson about what passive investors do in the marketplace. They care about averages. And this happened to Dell. If you go back and look at a longer term chart for Dell, you get a pop after earnings. What that can sometimes mean is that you're causing tracking errors for passive models. Even though you had this incredible upside, now passive investors are what are they? They're overweight in Levi, and that's going to, over time, might not happen immediately, but over time that will generally cause a little bit of pricing pressure. So that's a great point, John. That probably does play into what's happening with that trading today. Let me see if there was anything else main ideas that I wanted to cover. Let me just show you what I do. Henry gave you an example of how he kind of walks into the day. I will do something similar. I set up 3 different portfolios. And I just I just do this on Yahoo Finance, but I toss the low volatility names into a portfolio. I toss all of the momentum portfolio into a portfolio. Once again, IBKR users, you can get that complete portfolio just by trying a free trial. And then I will take my usual rule is 90% or above. And that's the names that you see right here at the top of this chart. And down below, I'm tracking, excuse me, I got the wrong one there. Here's the daily trading ideas. So that's the ones from today that were basically 90% or above. I'll start with these. And if there's nothing going on, no opportunities during the course of the trading day, then I will go and I will circle back to those other portfolios. And I did that a couple of days ago. I didn't have a lot of good choices in the daily trading ideas, but I found some as I circled back to the complete look. Let me just take a quick peek and see if I'm missing anything. Probably a good opportunity just for questions if they're coming in. Any questions that we can address for you guys? Yes, Steve.
Okay, so how do you protect yourself? I've noticed there are a couple of people have asked how you are protecting your losses. And for example, when you go into this and it's a 1 to 5 day, I'm talking about your daily probabilities.
Yeah.
So you got a 1 to 5 days, and then you have a day like yesterday, everything that you have had that had not closed out in those 5 days immediately goes down. I use a 1% stop limit. And so every one of them stop limited out. How do you protect yourself on something like that?
No, it's a great question. It's hard on days like that, correct? I'll give
Oh.
myself a little bit more wiggle room. That's just me personally. Um, I usually use around 2% or so for those stop losses. It gives me that wiggle room for that daily volatility when you do have days like that. If you use 1%, there's nothing wrong with that. Just recognize that you probably will get stopped out a little bit more often on when you have those volatile days.
Yeah, I
You know,
use
how
1%.
often? Go ahead, Steve.
1% on low volatility, 2% on momentum.
Okay, gotcha. Yeah. Little less likely than on the momentum names of getting stopped out. Days like yesterday, you'd probably get stopped out right away. Henry, am I missing anything in terms of the questions that you've been chatting with? I know you've answered a couple of them for me.
No, I mean, I think Lars had a question about, I think he was trying to say, for short opportunities, is there a short volume that you look for shorting? You know, if you're choosing to short something, is there a level at which you look for short volumes? You know, what's the inverse of
Sure.
divergence? We talk about,
Sure.
you mentioned convergence, so maybe
Yeah.
maybe that. And Lars, if I got your question wrong, maybe retype it.
And let me go ahead and share my screen and I'll show you the portfolio that I have. A couple of other users have different portfolios that they use. I basically took the opposite of our momentum portfolio. And just as an FYI, a few days ago, this had maybe 1 or 2 names in it. You can see right now we're up to 9. And I'll bring this up so you can take a screenshot if you would like. And like I said, it's basically just taking the opposite of momentum. I'll just leave it there for a second if you want to look at that. Another way that you can do a similar portfolio that our other Barry has had success on, I don't think he's on the call today, but he'll take 9s and 10s, and then as they start to move down from those levels, that's when he will start to short those. So once again, this is just mine, but there's other ways of doing it. It's basically just the opposite of divergence. And what you can know right now is, you know, this is increasing. So is there, you know, a likelihood that we get, you know, market declines? You know, certainly that's a possibility. You know, if we look at what's next from a context perspective, we're coming up on options expirations next week. And if market participants, you know, perhaps start to lose a little bit of money ahead of expirations, or they shift directions, maybe looking to short the market into expirations, that's always a possibility. You have that daily battle with some of the 0 days to expirations trades, and long versus short is getting a little bit more equal on some of these trading days. And actually, let me give you a slightly different look. When I was looking at my dashboard this morning and looking at the different sectors, I saw more convergence in almost everything. And here's what I mean by that. Look at communication services moving lower from a demand perspective. Look at daily short volumes moving higher. Consumer discretionary, same thing. You got and almost every single sector that you look at, demand lower, short volumes higher. What was actually looking okay going into today? Well, if we look at let's see, was it Magnificent Seven? I think it was the FANG stocks. So FANGs actually had, and this is just a separate portfolio. It's very similar to big tech, but we actually had increasing demand. Short volumes up a little bit, but look at those short volume levels, like around 38%. Very, very low compared to broad market averages that are normally around 49%. So right now, I would say the risk is that, you know, can big tech kind of save the day? And Henry, you mentioned this earlier, because we have declining demand and we have short volumes that are rising. That's exactly the opposite of an environment that you want to go long into. Big tech looks okay right now. Um, will this buying from big tech continue over the next few days? We don't know right now, right? That's why we check the data on a daily basis, but we'll kind of watch that. We'll have the data points for you tomorrow. And of course, we'll have that update in tomorrow's market desk notes. So that's what I'm looking at, is we do have risk going into expirations next week unless big tech kind of comes along to save the day. Henry, what are you seeing when you look at the let's call it the path ahead?
Yeah, I mean, I would say you just covered it. You said we're headed into option expirations. And so between earnings, one of the things somebody mentioned about how do you do risk management? I think Steve asked a similar question. This is how do we manage risk in this environment? And I do think we lighten the load a little bit between earnings. Like the context is earnings, and then there's an awareness of next week. That a lot of this money's shifting as we go into earnings that will affect it. I think starting Wednesday. So those are good things to be aware of as well. But other than that, yeah, like I feel like big tech's in a really great place, but is that going to be enough? I think we'll find out.
Mhm,
I had one other question from Gil.
mhm.
Was sorry, I'm looking at. I told him the answer was yes. Um, Utilizing Edge for longer term trades. So I have an answer, but I'll let you go ahead. Like I think we all have kind of two different portfolios or two different.
Mhm,
One is for
mhm.
our daily trading, one day is for our short term stuff. And then I think everyone on our team utilizes edge data to rebalance their long term portfolios
Mhm.
at certain points in time. And whether or not you want to do it for a midterm sort of process, I think you can apply it differently. Our daily trading ideas are specifically calculated for 1 to 5 days. But
Right.
the reason we show everybody the whole of market structure edge is because you can apply it to each name and apply it to your portfolio individually. Did I
Yeah.
miss anything there, Brian? Sorry.
No, I think that's good. So let's just pull up an example for IBKR users. Let's say you go into the daily trading ideas, just pull up a name, and then go over to your broad market so you can take a look at that. Here's a simple way that you could do things. Whenever you see broad market rising, sentiment rising, maybe you add a little, if it was a simple way that you trade the market, you could add to your SPY position. That'd be an easy way to get broad market exposure. If demand starts declining, maybe you take some profits. That would be a very simple way that you could do things. If sentiment goes below 5, then you would be very hesitant about adding 2 positions. And I think maybe we're kind of running out of time, but maybe the last thing we'll cover today. If sentiment gets below the green line, I know that's a new concept for many of you. It's basically what we call oversold conditions. It's an incredible buying opportunity. Historically, we've had the market go up 100% of the time when we go below the green line. Can it sometimes take a few days for that to happen? Absolutely. But that is extreme oversold conditions where the market bounces from those levels. But just in terms of modulating your overall exposure, I do this all the time. You can add to, once again, easy way to do it. You can add to SPY when sentiment is increasing or stable. You can take profits when it's declining. Simple way that you can approach the market. But the answer to that question is yes. It's a great way to know, when to be adding or subtracting from overall exposure. Are there any other questions that we can address here. We've gone just a little bit over time. Great questions from everyone. Thank you for your participation today. If not, we wish you good trading over the next few days. Please reach out to Henry or myself if we can help you in any way. We're here for any questions that you have. I'm BW at marketstructureedge.com, and Henry is HH at marketstructure.com. So with that, we'll wish you just a wonderful day, and I'm going to stop today's recording.
Thanks, you guys.